So I'm going to start with a disclaimer, and there's a very specific reason why I start with this picture behind the disclaimer, and that's to give you some indication as to what the nature is of our business. So we're a South African-based business. We've been around since 1895, also listed on the New York Stock Exchange. And whilst we started out as a deep-level underground mine, we have now, over the last 10 years, transitioned fully to a surface reclamation company, and our business is focused solely on the retreatment of what I prefer to call a stockpile, but what is traditionally referred to as mine tailings. So our motto is that we mine where the sun shines, and very deliberately steer clear of deep-level underground risk. Now, South Africa as a mining jurisdiction has for quite some time been criticized for a variety of things. And I think what differentiates this company is the fact that we very deliberately work towards those risks and put things in place that assist us in either avoiding them or softening the impact of those risks. And staying clear from underground mining is very much part of avoiding many of those risks. The company has a on-surface reserve of just under 6 million ounces. We have full access to all of these ounces, and it's our intention to mine most of that over the next 10, 15, 20 years. The important aspect is being able to access them in sufficient quantity and volume in order to mine them feasibly. And we've managed to achieve this by way of two very specific sets of infrastructure. The first one being the Ergo plant, which is a former AngloGold Ashanti plant which we acquired a few years ago and refurbished. This plant will ultimately have produced or treated 3.3 million ounces of reserve. It has a combined, the two sets of plants has a combined throughput of 2.2 million tons per month, and it is currently producing between 145 and 155,000 ounces per year, and it's been doing that profitably now for quite some time. The second newly acquired footprint that we have is that which we secured from Sibanye-Stillwater. They were sitting on a very large on-surface resource, which we managed to acquire last year. And the circuit is now in operation. We managed to refurbish and commission it within about 4 months. It has a 2.7 million ounce reserve of higher quality and higher grade resource, which obviously makes the value per ton that is processed quite a bit higher. Planned production is 500,000 tons per month, and we believe that we'll hit that roughly beginning of the next financial year, which is the 1st of July. That's when our next financial year starts. And we've been very pleased with some of the numbers that have been coming through from this plant. It's set up to produce between 40 and 55,000 ounces of gold per year. Another differentiator which sets us apart over and above the fact that we don't do any underground mining is the fact that we have a very small labor force. And our labor force is mostly comprised of highly skilled laborers. And I think calling them laborers is maybe not the right description. These are more operators because our company is a mechanized company. There's very little sweat capital going into our process. It's mostly the operation of machinery and equipment and very sophisticated measuring and monitoring equipment, as you see in that slide. It's a fit-for-purpose plant that we've established both at Ergo and also at Far West Operation. The nature of the game, or the name of the game, is high-volume throughput. And if you don't have a plant that is adequately spec'd and adequately sized, then this is going to be you're going to get stuck on the runway. You'll never get airborne. So, in the last few years, and this is despite some very significant challenges, and this is our motto. If this is your reality, are you feasible? Are you sustainable? In other words, do you need a better environment to make money, or are you successful as it is? Within the current context of the various challenges that our jurisdiction has thrown at us, and these aren't really political challenges, these are more infrastructural and supply challenges like electricity and so forth. Our operations have been very successful in generating cash. Ergo in particular has been cash positive, and that notwithstanding the fact that there were some very significant power supply challenges in the last few months. So just to give you an idea, we finished the end of March with just over $12 million in cash. These numbers are reported in rand because the rand does move rapidly to the dollar. So I just do the little conversion as and when I do this presentation. So roughly $12 million in cash at the end of March of this year. And I'll shed some more light on some of the financial numbers later on in this presentation. So stable cash, established footprint, large resource, mechanized, very good skill set. And this poises us very nicely also for future growth of further expansion of particularly our Far West operations, to take that from a 500,000 tonne per month operation to a 1 million tonne operation without very significant change to the infrastructure layout that we've got. So first phase is up and running, but we're very much looking at expanding that about 2 years from now into a second phase and increasing that volume throughput. So we do take very good exposure to movements in the gold price. You would have seen that in the last few days, both here in New York and in South Africa. Share prices responded very nicely to movements in the gold price. I think we're up 16% yesterday and today here on the New York Stock Exchange. And that is after the gold price had gone through $1,300. And if it goes up, share price will probably follow it. Gold price starts coming down, then you'll probably see the share price also coming down slightly more rapidly than the gold price. But there is very significant gearing to gold price. We have been the victim of low liquidity, especially after we were taken out of the GDX fund earlier this year. But we nonetheless seem to be rebuilding our register, and there seems to be some accumulation taking place based on fundamentals. And we're hoping to continue with that and see if we can bring some structure and some weight into our register. So this is what I wanted to talk about insofar as the cash flows are concerned. I mentioned to you earlier that we have roughly $12 million in the bank. So we started the quarter with just over $13 million in debt. And this was debt associated with the refurbishment and upgrading of the new Far West operation footprint. And during the first 3 months of production, this is now from March through to, or rather from December through to March, the first 4 months, we managed to reduce that debt by 90%. We ended up with only about $1 million in debt, and as I said earlier, approximately $12 million in cash. So this is a company that is excessively cash flow positive compared to our peers in the South African mining space. I don't think anybody is running at these sorts of net cash flow margins. And this is one of the differentiators. We managed to do this within the context of our current environment. And if nothing changes in South Africa, this is typically the sort of profile that we should be able to maintain. We've been the longest paying dividend yielding company in South Africa. We've been paying dividends without interruption for the last 11 years. We've never raised capital for purposes of funding. We haven't issued any shares. We did buy some assets, and we also incorporated our BE partner stake into the company in exchange for shares. But in my 10 years as CEO, I've never gone to a fund say, give us money in exchange for shares because we want to invest in the project. We basically invest what we make, and that's been enough to bring us to where we are. I think what resonates increasingly well in the current climate, current social-focused climate, is the fact that what we're doing also has a rehabilitation aspect to it. And there are probably few companies that has the ability to impact the quality of life of those living in close proximity to their operations to the extent that we do. So a lot of rehabilitation taking place through mining, through cleanup, and also the containment of the mining footprint. So what is our footprint? What is our focus, rather? We take the social dividend very seriously. We take the nature dividend very seriously. And we take the financial dividend very seriously. All three aspects of sustainable development are core in terms of our operations. And I think we've been successfully delivering on all of those. Thank you very much.